We now know that the high with a low, we now know that highs and lows are what moves the market. We now know that there's something that we call impulses and corrections. So we now know that there's what we call a high, and then there's what we call a low. There's what we call a high, and then there's what we call a low. But where most people fail now is they fail to get to know when a high is created or when a low is created. Some people they don't realize the very moment a low is created or a high is created. So this lesson is going to focus on that today. And this is going to help us a lot, especially when taking entries, right? So when teaching about highs and lows, there's always two candlestick patterns that I teach, which is the morning star and the evening star, right? And the reason why I teach these two is it's very easy to spot a high, neither to spot a low creation using these two candlestick structures. So how do we do it? We all know that when a market is moving, what it gives us is it moves with candlesticks, right? So say these are candles, right? And as these are candles, okay, let me do this. And as these are candles, if we're in an uptrend, we want to see green candlesticks, is it? So when when these candlesticks move, they move in something like this orderly manner, right? And then sometimes what you see is they have tails, and tails, I'm guessing all of us, we know what tails look like. Tails, basically, they are these. Let me show you here. I think on our first lesson that we did, I even taught you why tails exist, is it? Right. So tails can look like this, right? So as you are, let me try to keep it as short so that my example will come relevant for you. So as we are moving, right? So as we are moving with the trend, right? There's a point in time when you are going to see a candlestick that looks rare or that just doesn't fit in, right? And most probably this candlestick, how it looks like is it can have a small body and then accompanied by a bigger tail, right? So let me show you what I mean. So it can have a smaller body accompanied by a bigger tail, right? And immediately what you notice is this is rare, right? We haven't been seeing this as we were moving with the trend. So whenever we see a candlestick that looks like this, what it actually means is this tail is a rejection, right? And us having a smaller body means we have less sellers on this candle, we have less buyers on this candle and more sellers, right? So this alone should give us alarm. And automatically what we do is we label the candle right before that candlestick candle 1. And that candlestick we label it candle 2. The first candlestick, we now call it a push candle. Why? Because it accompanies our candlestick number 2. Our candlestick number 2 is what we call a signal candle. And why do we call it a signal candle? Because it's signaling us something. All along, we were not having it when we were buying within this trend. But just because it came, it sort of gives us alarm, right? So the first things first, what we would want to do is when you see this happening on your chart, you'd want to come, don't mark the tail, mark the body of your push candle from the top to the bottom, right? And proceed with it to go to the signal candle, right? So at the end of the day, what you're gonna have is a box that looks like this, right? So what it does now is it leaves you with a range, and that range is from this area, from this high top of the box, from this top of the box and down here. This is the range that we are most interested in, right? So us now having this signal candle, our add on, it signifies us that we might just start selling. But as it signifies that we might just start selling, this also tells us that a high is about to be made. I want you to listen to that carefully. I said a high is about to be made. All right, I hope you got me there. So is we now have the mindset that a high is about to be made. The next candle now that comes should not close above. Okay, let me do this and let me copy this candle actually. The next candle that comes should not proceed to go up. If it proceeds to go up, it means that our signal candle is now irrelevant. It's not telling us anything anymore, right? So our expectations are, we want to see the candle that comes next. We want to see it come and close below like this. And by nature, sorry, I said by nature. All right. Automatically we know that when a candle is a sell candle, it's supposed to be red, right? So what you're looking forward to is that red candlestick that sells to close below our box. Once it closes below our box, we now have what we call a morning star, an evening star, sorry. We now have what we call an evening star pattern. Right. Now that we have an evening star pattern, this evening star pattern, it signifies a high. This now means that a high has been made, right? This now means that a high has been made. So what we have is what we call a morning star pattern. And let's move to the morning star. Let's move to the morning star. What we know is when we are selling, right, we have a series of red candles that go down, pushing down the trend, right? But then all of a sudden, if we were moving just nicely within our trend, sometimes what we could witness is we could witness a signal candle in this form, right? A smaller body and a bigger tail. A bigger tail is a rejection. And in this case, it means, yes, there were sellers in the market, but they were overpowered by buyers, meaning buyers might just take over this trend, right? We might move and take over and push up, right? So immediately we see that we label our candlestick number 1 and our candlestick number 2, right? When we label our number 1 and our number 2, what we would want to do is we would want to put a box, right? We don't want to involve the tail, we just want the bodies, right? Like this. Meaning at this point, we're expecting a candlestick that's going to be green and it's supposed to close above that box in the opposite direction. Now, the candlestick that closes above the box, this candlestick, we call it a confirmation candle. Just as much as this one that is red, we also call it a confirmation candle. This confirms that a high has been made here, and this confirms that a low has been made. Now, this is an evening star, like I said. What about the one that's at the bottom? The one at the bottom, we call it a morning star. So, how do these work? What's the relevance? Like I said, a morning star tells us that we were in it, we were selling, right? And we've actually reached a point where we've made a low. So I would want you to visualize this. Let's say we are in an uptrend, and let me tell you that. Let's say we're in an uptrend. What we know is we can be having a, come here. We can be having a high, then a low, right? Let's say here. Then a high here, then a low, right? I think you now see why this high is necessary for us to know. Just as much as, let's say we are in a downtrend, we can be having our, let's say this is a downtrend, we can be having our high here, then our low. Then we need our high here, then our low going down. Before I proceed, is there anyone who isn't understanding what I'm saying? If you aren't understanding,
Yes,
simply raise your hand. All right. There's someone who said yes.
right. Ndakubvunza pamakendles apa kuti
Okay.
zvine basa here nekuti
We have hello. We have
yes.
with people from other countries. Can you use English, please?
All right. Thank you. I wanted to confirm. We use which time frame in determining these candles? Do we use a higher time frame or lower time frame?
We use both. Any of the time frames that you are willing to be working with for that time. The market is fractal. What I mean when I say the market is fractal is whatever happens, whatever structure that you see in H4, you can also see it in M15. So it now depends. Let's say we are in this bullish trend over here. This is what I would want to give as an example, right? Let's say we're in this bullish trend that we see here. If we want to see that we have a low, I think we can also see that this is a low. There's a morning star pattern here. Now we can see that we have a high, right? If we move on to a smaller time frame in this area, you can actually see an evening star. If we go down here, you can see that we have a morning star. So morning star patterns and evening star patterns, they're one of the things that we can actually say. If you are analyzing in H4, it's better to see that evening star or morning star in H4. And then if you're analyzing in M15, it's better to use that morning star or evening star from M15. I
All right.
don't,
Thank
I,
you.
I don't know if you understand.
Yeah, it's understood.
All right. Now, let's get to, like I said, this is going to be very short and precise. Let's get to the last part here, which is the most important. And I would want us to listen here very, very, very carefully, right? Very carefully. So let's say um we've managed to see that this is the range for our we were expecting our morning star to our evening star, sorry, to play out. Like I said, we have two expectations, right? The only way we can start ruling that this is a true evening star is after the confirmation candle closes. Why? Because we can have a candlestick that can open and then straight away come and close above, and then what it does it is just continues to go up, right? So once you draw your range or your box here, you would want to mark 50% of that box. And in this case, I think you can see I've just put a line, and this is going to represent my 50% of my box. And once I put 50% of that box, I'm going to have two entries. Since I'm expecting price to come and close below this box, right? And it's supposed to have this color, is it? So my first expectation is, or my first entry is, when price comes and just taps on the 50%, I would want to come and put what we call an aggressive entry. Sorry, aggressive entry here. Right. Meaning the moment it comes and taps on that 50%, before it even comes and closes below, I would have already put an entry there. And my stop loss is just above this wick over here. And my second entry, if I don't take the aggressive entry, is I'd want to wait for price to come and close below that range. When it closes below that range, I'll take what we call a conservative entry or a safe entry around this area. This is where I'll take my safe entry. Right. So let me type it down. This is where I'm going to be taking my safe entry. Right. Now, the way that I'm going to be treating this trade is for each and every two candles that price is going to, okay, for the stop loss of the safe entry, I would want to come and put it just above the 50% of that range. Or if I just want to stick to the normal rules, I can just come again and put it up just above this high. And the way that I'm going to handle this trade is for every two candles, let's say now my trade is now playing out. For every two candles that I'm going to move, right? Let's say I've moved two candles going down, right? Just forget the other part that's already on the right. We'll come to it. It's just correlating with what I'm doing. For every two candles that I'm going to move in my intended direction, let's say like this, I've moved two candles, right? What I'll do is, since my stop loss is here, I'll move it from there and I'll shift it above the second candle going up. And for two more candles that I move going down, I would shift that SL from here and I would come and put it here. So what this helps me is, even if the trade chooses to come and retrace on me, it's going to still hit my trade in good profit. So this is our entry for the evening star, right? And then for the morning star, what we'd want to do is, let me do this. For the morning star, what we'd want to do is we'd want to come and mark 50% of the range. Since now this is a morning star, what we expect is price to break going upwards, right? So if a candle comes and say closes below this signal candle, it means the candle that was supposed to confirm just as much as we did on the evening star. It means it's telling us that, it's not a valid entry. But if it comes and then taps on the 50% of that range, we take our aggressive entry. Why do we call it aggressive? We call it aggressive because usually this is a place where scalpers usually like using, right? They're putting bigger lots. And if it goes our way, it's a straight up trade. Like it will never have a bigger drawdown, or sometimes it's a little to zero drawdown entry at all. So when it closes above now, this is going to be our conservative entry or our safe entry, right? And sorry. And for the aggressive entry, our stop loss is going to be here. For our safe entry, it's going to be just a bit below the 50%, or if you want, you can just come and put it at the bottom of the wick. Now, for every two candles that you move in the intended direction, what do? You move your stop loss. You move two candles, what do? You move your stop loss going up. So this is how you enter using it on a morning star. Is there anyone who didn't understand?
We understood.
What about others? Is there anyone who didn't understand? Okay, we've bamboo. I've unmuted you. I've unmuted you. You can ask.
Maybe while at least we are waiting for Babu, maybe we can do an example.
All right. It's for real time examples. Don't worry, I'm gonna be sending you PDFs on that. Don't worry about that. I just wanted this one to be short and precise so that we first know what we're getting involved with.
Okay. Hi, everyone.
Hi, how are
Sir,
you?
please,
Yeah.
I'm sorry. I have a question.
All right.
So, from what happens on the screen, the aggressive entry, is there possibility that after that aggressive entry, that the price will still, assuming we are on the evening star, that the price instead of coming down, it will then go up after the candlestick of the aggressive entry? Is there possibility that such thing can occur?
Yes,
I don't know if you get my question.
there is a possibility. Actually, using our morning stars and evening stars, the only safest entry we can ever take is after we have a confirmation. Remember, when an aggressive entry takes place, it's just before the confirmation or before we close above the range. Now, you see with time on live examples. On live examples, you see that, say we're in a downtrend, right?
Say
You
we're in a downtrend,
you see
right?
that an
We're in
aggressive
a
entry
downtrend,
is
right?
actually a change of character, and a safe entry is actually a break of structure. So let's rush to the chart and let me show you what I mean. So that's the whole reason why we try as much to put our stop loss just below the wick and as far as we have taken our trade on the high. Usually there's a small distance. Usually that's the whole reason why we try to
Why?
minimize our losses using this aggressive entry by just putting our stop loss a bit below the wick. So in real time,
Okay.
on our real time charts, what you see is we will have a very small stop loss. So let me show you a point where there's a morning star or an evening star so that you understand what I generally mean. So I think we have an area here that,
Sakuna, can you hear me?
that you can all see, and let me mark it. Right. So if we see this area, this is an evening star, right? And if this is an evening star, let's zoom in. I want you to see something. Let's go to M15. Let's go to M15. Right. And let's go to that area where we marked. All right. I think it's to my left. Oh, my charts are not loading as far as there. Okay. Or what you can do is let's try to zoom in again. Since we can see this in any time frame. All right, we have a morning star. Let's use this morning star over here. I want you to see this. This is a morning star, right? And if this is a morning star, if we come and we mark it, this is our push candle here that I'm just marking, and then this is our signal candle over here. Since this is M15, I think we can work with it. So we come and we box that area. This is our morning star. I think we can all see it. So if we zoom to this morning star, what you see is, if we use market structure, what is this? According to the lessons that we've been learning, what is this? We have a high, a low, a high, a low, a high, a low, and then a breakout structure here. But before we broke this structure here, there's already another breakout structure and the change of character that's inside here. So if we now come, since that's M15, if we now come and we zoom in, let's say to M5, I would want you to see this. If we come to M5, what do you now see? If we come to M5, you didn't see this when we were in M15. What you see is we have a low, a high, a low, a high, a low, a high, a low, and then a change of character here, a breakout structure. Now we have a low, a high, a low, a high. But if we now come to a bigger time frame where we marked that candlestick from, what you're just going to see is you're just going to see a straight up morning star. So there are now possibilities that say the possibilities that are here are, let's say you've had your, let's say your morning star, right? Let me rub off all this. Let's say you've had your morning star, like what I was being asked. You can have your morning star. Let's say this is our morning star that I'm gonna be putting here, right? You can have your morning star, and as you have your morning star, let's say this is our structure for the morning star, and as we have that morning star, let's do this. Let's mark it properly, and let me just mark it properly. At this point, what we expect is what we expect to get is, sorry. Right. When we are
Hello,
here,
Sakuda. Sakuda. Hello.
yes, yes, I
Hello,
can hear you.
Sakuda. My question is, must it the candle, must it be a selling candle when you have the morning star? Can it be a selling candle, or can it be or a buying candle?
It's
The
supposed
one
to
that
be
has the long tail.
it's supposed to be a rejection candle, meaning that you can have it in you can have it in any color. It can be red, it can be green. So the color doesn't necessarily matter as long as it's a rejection candle and it's signaling you in a hammer type of form.
Oh, okay. Thank you, sir.
All right. So when we're at this point, now what do you do? Like I told you, we mark this box right. Now, when we mark the box, let me just remove here. When we mark the box, what we need to see now is we need to see the 50% of that range, right? Now, since the 50% is going to be our aggressive entry, right? I want you to know this. Let me do this here. I want you to know this. There's a possibility, it's very much possible, since we're expecting to see a green candle here. There's a possibility that price can buy, tap on the 50, and then you can get on the aggressive entry. But then at the end of the day, it can fail to come in close above and retrace back down and close below. Or what it can do is it can reject close above, followed by a red candle. Right. and then the price can just choose to go down. This is very possible. That's why the other type of entry is called a safe entry. This one is a risky entry in a type of way. But with how risky it is, it usually gives you around 60, 70, 80% win rate. Right. If you master it well and try as much to say what other factors am I putting it together with. So the only safest entry that we can have is the one that comes and closes above. Like I told you, when we are having an aggressive entry, if we see it as market structure, like what I told you when I zoomed in, on our market structure, it can be a low, a high, a low, a high, a low, and then a change of character here, right? We don't consider a change of character to be a break of structure. We consider a break of structure to be the one that really tells us that, our trend is now reversing. So if we want to come and based on the change of character, we'll see that we can have losing trades. Rather, what we need to see is a high, a low, a high, a low. When we have a change of character, there's a possibility that it might go down. But when we work with the break of structure, we can have a change of character here like this, and then a break of structure. Now this tells us that this is a confirmed entry, and then we can go up. This is why we try as much to use, what do you call this? This is why we try as much to use confirmed entries. That's why whenever we see that, let's say we had an impulse, now we're having a correction. This can be market structure in a smaller time frame, like low, high, low, high, low, high, low, high, low.